Okay, so we've got some really interesting stuff to dig into today.
Yeah.
About this, whole short selling thing coming back at the Korean stock market.
Right.
And you've clearly been following all this like really closely just based on all the stuff you sent over.
Yeah, it's a pretty big deal. Basically, what it means for everyone listening is that starting March 31st, 2025, short selling is going to be allowed again.
Wow,
on
yeah.
something like 2,700 companies on the KO's PI and KO's DQ.
Okay.
And that's actually the first time in 5 years that, every single stock is going to be open to short selling.
All right, so our goal today is to kind of break this all down for you. Like,
Yeah.
short selling can get pretty complicated.
Yeah.
We want to make sure that you understand what it means for the Korean market, like, what it means for your portfolio. And most importantly, we want to give you some actual strategies to use going forward with this new landscape.
Yeah, absolutely. Like, we're not just aiming to overwhelm you with information. We want you to understand what this means for you.
Right.
And, as I'm sure you're aware, this ban was originally put in place about 17 months ago, back in November 2023.
Right. Yeah.
And that was after they found all this illegal naked short selling going on
Right.
by foreign and institutional investors.
Yeah. Yeah.
And obviously that raised a lot of concerns, about whether the market was fair.
Okay, so before we go any further, I think we should just make sure that everyone's on the same page with what short selling even is.
Oh, yeah, definitely.
And your research actually does a really good job of breaking down the steps.
Oh, good.
So can we just kind of walk through that just so everybody is
that's better.
starting at the same place?
So it's basically you're betting that the price of a stock is going to go down.
Right.
So the first thing you do is borrow shares of that stock from a securities firm.
Okay.
Just like borrowing anything else, you have to give them back.
Right.
But for now you have them, and then...
So what do you do right away after you borrow the shares?
So step 2 is you sell those borrowed shares on the market at the current price.
Okay, so now you've sold stock that you technically don't own
Exactly.
because you borrowed it with the hope that the price is going to drop.
Right.
So what happens next?
Okay, so the important part, step 3, is you have to buy back that same number of shares later.
Gotcha.
And you're hoping that you can buy them back cheaper than what you sold them for.
Okay.
And that buying back part is called covering your short position.
So that's when you actually make money or lose money.
Right, step 4 is where the profit comes in.
Gotcha.
If you bought it back for less than you sold it, for that difference is your profit.
Oh, okay.
But of course, if the price went up instead of down, then you lose money.
Okay, so it can definitely be risky.
Yeah, definitely a risky game.
So I was looking at the reasons that they're giving for resuming this full short selling. And it seems like Financial Services Commission Chairman Kim Byung-won kind of laid out the main points.
Yeah, he basically said that they've spent the last year doing a bunch of reforms to the whole short selling system.
Okay.
And that they've put these new systems in place for all listed stocks.
So they've made a lot of changes.
Yeah, a ton of changes.
Okay, so let's talk about some of these big improvements that they've made.
Okay.
What are some of the key changes that stand out to you from the research?
Okay, well, one of the big ones is the collateral ratio.
Okay.
So before, individual investors had to put up 120% collateral
Oh, wow.
to short sell something.
Okay.
Now it's down to 105%, which is the same as what institutions have to put up.
So they're making it a little more even.
Right, they're trying to make it a level playing field.
Okay, what else?
Another big one is the stock loan repayment period.
Oh, okay.
So now everyone has 90 days to repay the loan,
Okay.
and they can extend it up to 12 months.
Okay, so that makes it a little more predictable.
Exactly. It should make the market a little bit more stable.
So what about the illegal naked short selling that was going on before?
Yeah, so they've put in this triple-layered blocking system called the NSDS.
Okay.
And it basically involves the securities firms, the institutional investors, and the stock exchange itself.
Wow. So that's a lot of oversight.
Yeah, they're trying to make it really difficult to do naked short selling now.
Okay, so there was also something about a designated overheating stock system.
Right, so that's going to be in place for the first month or two after the resumption.
Oh, okay.
And it's basically going to flag stocks that are seeing a lot of short selling and price declines.
So if like a stock is dropping really fast because of short selling,
Exactly.
you're going to kind of put a warning sign on it.
Right, it's a signal for investors.
Okay, so with all these changes, I'm curious what you think the overall impact of this is going to be on the market. Like, do you think the KCO's PI and KO's DQ are going to tank?
Well, the general consensus among experts is that it's probably not going to have a huge impact on the overall indices.
Oh, that's interesting.
If you look at what happened in the past when they resumed short selling before, it didn't really change the market's 1-month returns or the volatility that much.
So we're not looking at like a huge market crash or anything?
No, probably not.
Okay.
Although, there was one interesting observation from a researcher at IM Securities
Okay.
named Shin Hee-kyul.
Okay.
He said that even when you look at the stocks that were most heavily shorted,
Yeah.
the ones with really high valuations only went down by like 30%
Okay.
if the overall market was going up.
Oh, wow.
But if the market was going down, then like 80 to 90% of stocks lost money.
Oh, wow.
So that kind of suggests that short selling doesn't really dictate where the market goes.
Oh, that's a good point. Yeah.
It just kind of amplifies what's already happening.
So it's more like a symptom than a cause.
Exactly.
Okay.
And there was another researcher at NH Investment and Securities named No Dong-gil,
Okay.
and he said that the main point of the ban wasn't really to prevent all market swings, but rather to put these new systems in place
Okay.
so that we don't see those really sharp drops like we did before.
Because of the illegal short selling.
Exactly.
Okay, so if the overall market isn't going to be hit that hard,
Yeah.
what kinds of stocks do you think are going to be most affected?
Okay, well, there are a few things that make a stock attractive to short sellers.
Okay.
First of all, if the stock seems overvalued, but
Sure.
the price is high compared to its earnings,
Right.
then you also want to look at the loan balances.
Okay.
If you see a stock with a rapidly increasing loan balance, that could be a sign that people are getting ready to short it.
Because they're borrowing a lot of shares?
Right.
Oh, okay.
And then there are the thematic stocks.
Okay.
You know, the ones that have been really popular lately, but maybe their fundamentals don't actually support the price.
Oh, like the hype stocks?
Exactly.
Okay.
And finally, short sellers like to go after the large cap stocks that are really liquid
Okay.
because it's easy to borrow and sell those shares without moving the price too much.
Right, they can get in and out quickly. So it sounds like short sellers are basically looking for stocks where the price is out of whack with the actual value of the company.
Yeah, pretty much.
Oh, wow.
Or where there's been a lot of speculative buying.
Okay.
Oh, and this is interesting. Your analysis also suggests that this resumption of short selling could actually bring more foreign investment into the market.
Oh, really? How does that work?
So a lot of these big foreign institutional investors, they like to use what's called a long short strategy, which means they buy stocks they think will go up and they short stocks they think will go down.
Makes sense.
But they couldn't really do that in Korea because of the ban.
Right.
So your research shows that during the ban, foreign investment actually went down.
Okay.
And the KOSPI even had negative returns in 2024.
Wow.
So some analysts think that the lack of short selling opportunities actually made Korea less appealing to foreign investors.
So it's possible that now that short selling is back, they'll be more interested in investing here again.
Exactly, and that could lead to more liquidity and trading activity, especially for the KOSPI.
Interesting.
You know, foreign ownership tends to be a good sign for the market.
Right. Yeah, it shows confidence.
Yeah.
Okay, so let's go back to this overheated stock designation system for a minute.
Okay.
Can you walk us through how it's going to help stabilize the market in these first couple months?
Sure. So, like we said, it's meant to prevent these really rapid drops in stocks that are getting hit hard by short selling.
Right.
It's a way of letting investors know that something's going on.
Okay.
And studies have shown that when a stock gets designated as overheated, the sharp drops tend to ease up a bit and the price stabilizes.
Okay.
And the short selling ratio usually goes down too, which helps to limit further short selling.
So it's like a speed bump for short selling?
Yeah, kind of. It can trigger a one-day ban on short selling for that stock.
Oh, really?
Yeah, they're only planning to use it for the first month or two, though.
Just to smooth things out.
Right.
So how do they decide which stocks are overheated?
Okay, so there are 3 things they look at.
Okay.
First, the price has to have dropped by at least 5% compared to the day before.
Okay.
Second, the short selling ratio has to be at least 20% for KOSPI stocks or 15% for KOSDIQ stocks.
Okay.
And third, that daily short selling ratio has to be at least double the average ratio for the past 40 trading days.
Wow. So they really have to be getting hammered.
Yeah, it has to be pretty extreme.
And if a stock hits all 3 of those triggers, what happens?
Then they can't short sell that stock the next day.
Wow. Okay. So that's a pretty big deal.
Yeah, it's a way of preventing things from getting out of control.
Okay, so now let's talk about what all this means for you, the listener. Like, what are some strategies you can use going forward?
All right, well, first of all, you want to be aware of the sectors that might see more short selling.
Okay.
Your research points to hotel and leisure transportation display,
Okay.
IT home appliances, securities, insurance, shipbuilding, and chemicals.
Wow, that's a lot of sectors.
Yeah, it's a pretty broad range.
So you're saying those are the ones that might see more volatility?
It's possible.
Okay.
You know, the leading stocks that have gone up a lot recently, they might be targets for short sellers,
Okay.
but the strong manufacturing sectors are probably going to be okay after some initial adjustments.
So it's not necessarily a reason to avoid those sectors entirely,
Right.
but just to be aware.
Exactly.
So what about individual investors? What should they be doing with their own portfolios?
Okay, so the first thing you want to do is take a good hard look at your holdings. Check those valuations.
Okay.
Look at the PVR.
Right, the price to earnings ratio, price to book ratio.
Right, yeah.
Okay.
If you're holding any stocks that seem really expensive compared to their earnings,
Yeah.
those could be targets for short sellers.
Okay.
So you might want to think about reducing your position in those.
Get out before the short sellers come in.
Yeah, it's not a bad idea.
Okay.
The second thing you want to do is keep an eye on those loan balances. We talked about how a rising loan balance can be a sign that people are planning to short a stock.
Cool. Yeah.
So you can track those balances on the Korea Financial Investment Association website or through your brokerage.
Okay. I'll make sure to link to that in the show notes.
Great.
And your research even mentioned that
Oh, yeah.
Samsung Electronics, Samsung Heavy Industries, and Doosan Enerbility
Right.
were the top 3 KOSPI stocks by loan balance on a certain date.
Yeah, and those last two stocks, Samsung Heavy Industries and Doosan Enerbility, they moved in different directions.
Okay.
And that could be explained by how quickly their loan balances were increasing.
Oh, wow. So that's something to watch.
Yeah, definitely.
So if you see a stock you own and the loan balance is going way up,
Yeah.
that might be a sign that trouble is brewing.
It could be, yeah.
Okay, so what's the best way to invest in this new environment?
Well, the most important thing is to focus on fundamentals.
Okay.
Look for companies with good earnings potential and a strong growth story.
Right, the companies that are actually doing well.
You know, look for companies that are expected to have good earnings in 2025.
Yeah.
And companies that have a competitive advantage in their industry.
Makes sense.
Those are the companies that are going to be less affected by short selling.
So the tried and true strategies still apply.
They do, yeah.
Okay.
Oh, and there are some other things that can make a company less vulnerable to short selling, too.
Oh, okay.
Like if they don't have a lot of shares available for trading.
Okay.
Or if most of the shares are owned by big institutions,
Okay.
those are harder to short.
So fewer shares to borrow.
Exactly. And companies with high dividend yields
Wow.
that can provide some price support.
Right, because people are getting those dividends.
Yeah.
Okay.
And of course, if institutional investors are buying the stock consistently, and if the stock is already undervalued,
Okay.
then short sellers are less likely to go after it.
Gotcha.
So basically, you want to look for companies that are financially sound,
Right.
that have a good track record, and that are priced fairly... Okay.
So just to recap, the key actions here are to really look at your portfolio and understand the valuations.
Okay.
Monitor the loan balances of the stocks you own.
Yep.
Invest in companies with solid fundamentals and strong earnings potential.
Gotcha.
Set stop-loss levels to manage your risk, and maybe even look for some undervalued quality stocks that might benefit if short sellers have to buy back shares.
All right, so I think we should talk a little bit more about the different types of short selling.
Sure.
Your research mentions Daicha and Daiju transactions.
Right, so Daicha is mostly used by institutions and foreign investors.
Okay.
They're borrowing shares from other institutions, usually in large blocks.
Okay.
And they get lower interest rates and longer repayment periods.
So that's the big players.
Yeah.
What about Daiju?
So Daiju is what individual investors use.
Okay.
They borrow from their brokerage.
Okay.
Smaller amounts, higher interest rates, shorter repayment periods.
So it's like the retail version.
Exactly. And it sounds like the government is trying to crack down on illegal short selling with all these new regulations.
Yeah, they're definitely taking it seriously.
Did you see any specifics about what they're doing?
Yeah. So alongside the resumption in March 2025,
Right.
they announced a whole bunch of measures aimed at preventing illegal activity.
Okay, fair.
And the Financial Supervisory Service has been really busy setting up all infrastructure.
So what exactly have they done?
Well, back in January,
Okay.
they released these comprehensive guidelines on short selling.
Okay.
And they also finalized the system for issuing short selling registration numbers.
So everybody who wants to short sell has to register.
Right.
Okay.
Then in February, they held forums to talk about the new systems and get feedback.
Yeah.
And then just this month, they had a big opening ceremony
Oh, wow.
for the electronic connection between all the major short-selling entities, both here and internationally.
Okay.
And they also connected it to the central short-selling inspection system.
So they're really trying to make everything transparent and accountable.
Yeah, they want to be able to track everything.
So what do you think all this means for the future of the market once short selling is fully back in place?
Well, the main thing is to be careful about those overheated stocks.
Right. The ones with weak fundamentals.
Exactly.
Yeah.
Those are the ones that are most likely to get hit by short sellers.
Okay.
But on the other hand, there could be some really good opportunities to invest in undervalued stocks,
Okay.
because those could benefit from short covering.
So if the short sellers have to buy back shares to cover their positions,
Right.
that could actually push the price up.
Exactly. It's called a short squeeze.
Okay.
There was a professor at Sejong University named Hwang Young-sik,
Okay.
and he had an interesting take on this.
Yeah.
He said that while short selling is generally a good thing for the market,
Okay.
it helps to align with developed markets.
Right.
The stocks that are newly open to short selling,
Okay.
they might not be able to handle the shock very well at first.
So they could be more volatile in the beginning,
It's possible. Yeah.
but in the long run, short selling should make the market more efficient.
Right.
Because it forces prices to reflect the real value of the company.
Exactly. It helps to prevent bubbles.
Okay, so let's address some of the concerns that people might have about this.
Okay.
Your research had a really helpful FAQ section.
Oh, good.
So first question, is the whole market going to crash now that short selling is back?
Probably not.
Okay.
Based on the data we've looked at, the overall impact on the market is likely to be pretty small.
Okay.
It's more likely to affect individual stocks,
Right.
especially the ones that are overvalued or that have gone up too fast recently.
Okay.
The big things that move the market are still going to be things like the global economy,
Right.
corporate earnings, that kind of stuff.
So the fundamentals are still the most important.
Exactly.
Okay, second question. Can regular people like individual investors participate in short selling?
Yeah, they can. They have to open a special account with their brokerage.
Okay.
It's called a DAJU account.
Okay.
And they have to put up 105% collateral.
All right.
But it's important to understand that short selling is risky.
Yeah, you could lose a lot of money.
You could lose a lot of money.
Okay.
So it's really not for beginners.
Yep.
If you're new to the market,
Yeah.
just focus on managing the risk of your current investments.
Right. Don't try to get too fancy.
Yeah, keep it simple.
Okay, last question. Which stocks should people avoid now that short selling is back?
Right. So be careful with stocks that have super high valuations compared to other companies in their industry
Okay.
or compared to the market average.
Okay.
Also, be wary of those hype stocks.
Right.
The ones that have gone up a lot based on speculation or trends,
Okay.
but haven't actually improved their business.
Okay.
And keep an eye on those loan balances.
Right, yeah.
If you see a stock with a rapidly increasing loan balance, that could be a red flag.
Okay.
And of course, avoid companies with negative earnings outlooks.
Right, the ones that aren't doing so well.
Exactly.
And stocks that are illiquid.
Right.
Okay,
Meaning it's hard to buy and sell them.
gotcha. So you could get stuck.
Right.
So it seems like the overall message here is to be really selective.
Yeah.
Focus on companies with strong fundamentals.
Right. And be careful about those high valuations.
Right. Don't get caught up in the hype.
Exactly.
Well, this has been a really thorough look at the return of short selling to the Korean stock market.
Yeah, it's definitely going to be interesting to see how it all plays out.
I think so too.
But like we said, it's probably not going to be a disaster for the overall market.
Right.
And in the long run, it could actually be a good thing.
Right.
So for you, the listener, we encourage you to use this as a chance to really look at your portfolio.
Yes.
See if there are any companies that you need to get rid of,
Okay.
and maybe even some new opportunities that you haven't considered before.
Yeah, you might find some hidden gems.
You never know.
So the key takeaways here are stick with strong companies.
Get rid of anything that seems overvalued
Yeah.
and look for those undervalued stocks.
Okay.
And don't forget about risk management.
Right.
Set those stop loss levels.
Especially with all the potential for volatility.
Yeah, it's going to be a bumpy ride for sure.
So here's a final thought for you to think about.
Okay.
Now that short selling is back, it's going to expose the companies that are really overpriced.
Right?
So as you're doing your research,
Yeah.
are there any companies that you've overlooked before
Okay.
that might actually be really good investments now?
Interesting.
Either because they're solid companies that can weather the storm,
Right.
or because they're undervalued and could benefit from short covering.
Yeah, that's a good point.
So do your homework
Yeah,
and see what you can find.
absolutely.
Thanks for joining us for this deep dive.
Thanks for having me.